industry is so how your industry is so unique, and how the challenges of that uniqueness can be, how we can harness those, what we can do to accommodate fluctuations and changes and things like that, and how we can better prepare for the future and be prepared for your business to do well continuing forward. So a little bit about me. My name is Angie Fitz. I work at a small firm in Northeast Ohio. It's in Chagrin Falls. It's near Cleveland. It's called Schiciano, Johnston, and Bialek. I had never worked with anyone in the monument industry until about 2020. And we got a new client who had just started a relationship with StoneSpot and QuickBooks Online, and they needed help integrating all of that and learning how to run their financials and get everything working together. And so what I did was I reached out to Missy at StoneSpot, who I'm sure many of you know, and I reached out to her and I said, hey, I want to learn more about your product and how I can better help my client with the integration and everything else going forward. And that initial consultation led to this whole relationship that we have, where I've helped many clients convert to QuickBooks Online, integrate with QuickBooks Online, with StoneSpot. We've offered, different services. We have continuing relationships with a lot of clients too, from all over the country. And we've really worked also with the MBNA to, we talked about the benchmarking process. We've helped them with questions here and there. And we've been able to learn a lot about the industry through the clients and our discussions with the MBNA and our relationship with Missy at StoneSpot. So our firm has completely embraced the monument industry as a whole. We love the people that we've met through it, and we're comfortable and confident in our knowledge about the industry and how much we've learned about it. And it makes us a valued member for, I feel like, a lot of our clients, because we know what they're going through so much, and we can apply our knowledge through so many different clients in the same boat. So they say there are two things in life that you can't escape, right? Death and taxes. So we like to think that we can help with a little bit of one of those. Let me just mute my phone. I didn't remember to do that. Okay. So the role of monument builders in our community is such a unique role. You think about if you just have a retail store of, you're just selling clothing or something like that, it's something that you go in, you buy something, you leave. Well, the monument industry, it encapsulates such a specific part of people's lives that you meet with families and you are a part of their life basically forever. The monuments themselves, they're powerful symbols that honor deceased people, and they provide comfort to the families, and they reflect cultural values and beliefs and heritages of communities. They preserve history, which is super, I think, super cool about what you guys do. The builders themselves, everybody is very creative. They're highly skilled craftspeople. The different, I've seen several different monuments, and the range of creativity is always just incredible to me. And everybody has such meticulous attention to detail. And I just love that about it. Every monument is a unique work of art too. It's something special for that specific person. And it also showcases the talent of the designer. And the creation of the monument, it's a meaningful process for the families as well, helping to memorialize their loved ones and come through and have a final product that they can come back to for years and years to come. So the role of monument builders in communities, I feel like, is incredibly important, and one that maybe people don't think about right away, but it's one that everybody is going to have a relationship with at some point. Almost everybody, right? So, like as I said before, you guys have a kind of a unique industry. There's several things that we've realized as we've gone along with many of our clients, that the key things that they all have in common. So one of the key challenges that you guys all have are the long sales cycles. Some of them we've seen have been up to, a year, 18 months from initial order design and consultation all the way through when you finally get the granite and make the product. The demand for your products are also really seasonal. There's most of the country, goes through a lull in the winter, and the spring and the summer are super busy, and then the winters are quieter. In some areas of the country, it's not quite the same. Sometimes it's a little bit opposite, depending on weather and geographic location. But the demand is seasonal for most everybody that we've seen. There's a lot of compliance and regulations that needs to be followed in your industry, not only local, government, state, things like that, but the cemeteries also have a lot of guidelines and regulations that need to be followed. And then finally, you have to be creative all the time, all the time. You have to be creative and accommodate, customers for a design that they have in their head or a wish that they want. And the uniqueness of that, it's something that a retail store that sells clothing isn't going to have. They're not going to have that relationship where they're designing something custom for each person. So that creates a really unique business environment that not all other people really understand or know how to navigate it as well. So what are some of the financial implications of, your industry? One of the things we want to talk about in a little bit is cost structure. We need to think about how that's a key financial consideration. We need to talk about material costs, labor, customization request costs, if that's going to cost more to get different material in, if you need to get a different type of inlay, something like that. We are going to talk about how cash flow can be super challenging due to the long payment cycles and the long sales cycle and the seasonal variations. So it's important to manage your cash flow effectively to be able to weather those ups and downs as easily as possible. And inventory control, that's something that we've seen a lot of too, because the impulse is to buy as much as you can while you can, but then maybe you're stuck with this giant inventory that you can't sell as fast as you bought it. So helping to manage costs and ensure orders can be fulfilled with inventory management is pretty crucial. So careful management of these aspects is essential for the overall health and profitability of your business. So again, like we're talking about the community engagement and why this is so important. As monument builders, you have a strong presence in your local communities. You actively participate in events and you support charitable causes. And I've seen articles of monument companies from 100 years ago. It's the same company, been owned by the same family for 100 years, and how they've grown with the community, and the community has grown around them, and they've been in parades, and they've been in, they've sponsored events. And it's such a unique thing, I think, that you guys are so heavily entrenched. Building trust is critical it's a very sensitive industry, right? We want to build trust. We want to prioritize reputation management and ensure that your customers feel confident working with you. They want to know that when they give you the money, that they're going to get their product at the end, and that they're going to have communication throughout the whole thing. So all of that, building trust and that relationship is important. And finally, everybody's read reviews, right? We've all seen reviews of everything. I can't think of anything I bought in the last 6 months that I haven't tried to look for a review for first, right? And so word of mouth and online reviews have a significant influence on customer decisions. So you work hard to provide an exceptional experience. We want to make sure that those lead to positive referrals and reviews in the future. So why is accounting important specifically for monument builders? It's important to maintain financial stability and longevity in your business. It provides crucial insights into your cost structure, like we discussed, cash flow, key financial metrics, ratios, all of those things. Your data enables your business to make strategic, informed decisions to support long-term successes. And by embracing the accounting fundamentals, you can help ensure compliance, optimize your operations, and still honor the people and the memories you preserve through your work while keeping in compliance and helping your business to grow. So proper accounting practices are essential for the sustainability and the growth of your company. So we're talked about basic accounting fundamentals. I'm just going to go over a little bit of accounting fundamentals. Not everybody wants to get too deep into the trenches, but the basic definition of accounting is the systematic recording, reporting, and analysis of a business's financial transactions and performance. So recording transactions is super important because that's how you keep track of your income and your expenses, right? And we need to know what you got in and what you've gotten out. And if we just have scraps of paper or we have an Excel list, that's not a good example of record keeping, good record keeping. Regular financial reporting. So taking those record keeping and those records and transforming them into reports is it provides valuable insights into your business's performance, which can help guide decision making. And you can do comparative to prior years and prior periods, and you can see trends, and that helps you project what's going to happen in the future. That leads to the financial analysis. So the analysis of the recording and the reporting help you make informed decisions and identify opportunities, maybe even, or see a potential risk that could be happening brewing under the surface before it actually becomes a big problem. You'll be able to notice maybe your costs are creeping up too high and you haven't adjusted pricing in a while. So these three core accounting functions, recording, reporting, and analysis, are fundamental. They're the bottom of the period to understanding and managing your company's financial health. So let's talk about the different financial statements that we have. These are the three most common that every company sees or has been asked for by their lender. And they're the ones that you should be pretty familiar with looking at and understanding. The first one that we have is the balance sheet. So the balance sheet shows the company's assets, liabilities, and equity in that order at a specific point in time. So it gives a whole holistic snapshot of the company's financial position. So again, we want to think this is from inception of the business all the way till a specific point in time. That's what the balance sheet covers. The income statement, on the other hand, that tracks your company's revenue and your expenses over a period of time. And it demonstrates your profitability, if you have a loss, things like that. The income statement flows into the balance sheet. But the balance sheet, where we said is a accumulation of time up to a specific point, the income statement covers a period. It could be a month or a quarter or a year, but it only covers a specific period. And then finally, the cash flow statement. This monitors cash. That's it, in and out. It monitors cash. It shows what cash you brought in and what cash you've spent. And it reconciles to your bank balance is what it really does. It helps you manage your liquidity and identify cash flow patterns. And it doesn't take into account AP and AR. So if you ignore those two, this is where your cash flow statement is. It's in and out of just cash. So together, these three statements are the fundamental accounting statements, and they offer a really good view into the financial operations and health of every company. So the benefits of the financial accounting and really focusing on putting effort into your finances and doing good record keeping is it helps you do all of these other things that will help your business grow, such as the budgeting, the cost control, and the inventory management. So we talked about budgeting a little bit before, but it's important to be able to budget because it helps you set financial goals and then measure yourself against those goals and see how you're doing. You can create budgets for a season or for a year, and you can see as you go through how what you're doing is affecting that budget, and if you need to adjust as you go. The cost controls, by practicing good accounting, it enables you to closely monitor your costs related to materials, labor, overhead, and it gives you greater control of your expenses, knowing what those are and being able to react much more quickly if they're going up or down in a way that you don't expect them to go. And then the inventory management, it allows you to monitor your stock levels to ensure you can meet customer demand without over ordering or running out of critical components. So by having good record keeping and good accounting, you'll know where your inventory is. And if you're low on something, or if you have an excess of something that maybe you need to get rid of. So together, these three things provide monument builders with the financial insights and operational control needed to run a successful and profitable business. So a couple things nobody really wants to talk about are compliance and taxation. And that's kind of what our role is, right? Is to help you with this. So compliance and taxation are critical for every business. There's regulatory requirements, there's state and local requirements. There's industry regulations, even tax laws, all of that are regulatory requirements that everybody's required to follow. And some of them are unique to your industry as well. Then there's the tax planning. So the tax planning is what we do, what we specialize in to maximize your tax efficiency. We're looking to make sure that you are as tax efficient as possible and that you take advantage of all deductions that are available to you, any credits. And we look for strategic ways to reduce your tax burden but still help your business grow and be profitable and continue forward as a whole company that has, a good future outlook. So the proper record keeping, again, it goes back to this proper record keeping, is essential to support your tax filings and any audits or regulatory reviews. If you have all of this complete and accurate, it's so much easier to send reports off to somebody for an audit rather than having to go dig through boxes in the shed of trying to find, receipts from customers from 2 years ago that have been filed away that you haven't looked at. So that's something that we actually have seen quite a bit is by having good record keeping, it makes any of these things much, much easier to navigate the audits and things like that. The financial planning also helps you with this decision-making and growth, right? So there's a lot of trying to just get day to day, right? And you just want to get through today, but we want to be able to have that time to sit down and plan for the future. And we want to be able to look at things and make sure that we are taking advantage of opportunities, but also being very aware of any risks. So the strategic planning part, this provides data-driven insights into growth and helps you make smart business decisions for growing. The risk management part of it helps you identify risks early, right? You can see if maybe your costs are getting too high or you're not able to collect on your AR as fast as you used to be able to. So it allows you to take proactive measures before they become a problem. And the biggest thing that we've noticed is the lender confidence. So we talk with bankers a lot with Monument Industries, and some bankers they're not familiar with your industry and they aren't familiar with things like big customer deposit liability accounts and long lead times and big ARs because you're waiting on all these orders to be finished. And so we are able to have that discussion with them and provide them with, hey, look, these are good financial statements. These show how the business has been doing over the past several years, even though, yeah, there's a big liability on the balance sheet, but that's future orders that are coming through, right? So we're able to have those conversations. And by being able to offer that to your lender, that makes them much more confident in your business as well. So it helps for long-term success by having all of this set up from the baseline correctly. So there's some key accounting practices for monument builders that we've learned as we've gone along. Embracing the core accounting principles is crucial to optimize costs, manage cash flow, make strategic decisions, things like that. By tracking the data and reviewing regular reports and discussing them with your management team or your leadership team, and doing things like the financial analysis, that can help you preserve your resources and better serve your business and your families and your communities. The accounting practices then also provide valuable insights that'll drive the long-term success of your business. So the next slide, I'm going to highlight a few key accounting principles and practices that can help you, as we discussed in a few slides ago. So I mentioned budgeting again before, and there's a couple things that you can do with budgeting. So it helps businesses of all sizes. It can help a small business, it's just a one-man shop, or it can help a big company with several locations. Budgeting and forecasting can be used for a small, short period of time, or it can be used for a many-year period of time. It's really flexible, and it really helps you plan for what you want to happen in the future. Annual budgets can help you account for seasonal fluctuations, demands, and costs, things like that, and allows you to plan ahead. The cash flow projections that you can get from the budgeting and the forecasting, those are essential for managing your inflows and your outflows to make sure you have sufficient liquidity. So you want to make sure, in the next year, you're going to be able to collect enough money to pay all the bills that you are going to have as well. And the scenario analysis is pretty cool because you can put in, you can change metrics, change something, and then see how that affects your whole budget going forward. You can change costs, or labor, or sales numbers, and then you can see how that affects your overall financial performance just by changing one variable. So developing these robust budgets, cash flow forecasts, and scenario plans, it can give you greater visibility and control over the financial future of your company. And it may seem like it's a lot of work to do it, but it's really not. And it can really be really beneficial for your company. The cash flow management. So the cash flow is the lifeblood, right? Lifeblood of every company. And we need to really focus on managing it effectively. If you have a ton of AR that's never collected, or it's way, way past due, that's not helping you. That's not generating revenue for you. That's not earning money for you. That money could be, if you're not spending it, it could be earning money for you. So we want to make sure that we optimize our cash flow management process. So there's a couple ideas I have here on how to manage your cash flow and make it a little bit better. The first one obviously is receivables. That's the first thing you think of when you think of cash, is getting your cash in, right? We could focus on streamlining your invoicing processes. You could offer discounts for early payments. You could have somebody dedicated to following up on those old AR balances and accelerating those receivables that you get back into the company. Another one are payables. I mean, you guys spend a ton of money on granite, freight, labor. Like, those are the biggest things, right? So on the payable side, you could discuss building stronger supplier relationships. Maybe you can get extended payment terms or early payment discounts, and you could take advantage of those discounts. And those can be significant. Sometimes they offer 2%. 2% over the whole year is a significant increase to your bottom line. So maybe that's something that you can talk about with your suppliers, or see if you can negotiate a discount on freight, for however many, whatever orders from, a different location or something like that. And then the one nobody wants to talk about either is the maintaining adequate reserves. Nobody wants to put money into savings and then just see it sitting there. But if you have that money in a savings account, or even in another checking account, just where it's available, having 3 to 6 months worth of capital that can be used to pay for all of your expenses would be such a relief to most business owners. And it's something that they should really prioritize, having that cushion, because it helps you weather if there's a catastrophe of some sort, or if there's an emergency and the shop can't work for a month. Knowing that you have that cushion there not only reduces your stress, but it also reduces the concerns from your lenders and other management and stakeholders of the company. So some cost control measures that I thought about that we could talk about are things like regularly analyzing your costs. Maybe you've always bought from the same supplier, but maybe you can shop around a little bit, and maybe somebody else will offer a better price on the same kind of quality. I know you don't want to lose quality, but maybe that there's somebody else in the industry that you didn't know about that's able to offer a better price for the same product. The benchmarking. So this is something that the MBNA, I know they've talked about. We've done a little bit with it. It's not as robust yet as they want it to be, but it's on the plan, I think. And benchmarking your key performance metrics and indicators and ratios against industry standards, that can help you identify where maybe you're not being as efficient in something as somebody else is. Maybe everybody else's accounts receivable turnover ratio is much higher than yours. Well, what are they doing differently? They're doing something differently to collect that money faster. So by being able to benchmark yourself against another company that's similar size, similar activity, that gives you a really good idea of where can you be better, or where are you really doing well compared to everybody else. And then process optimization, another big one. So by streamlining your workflows, eliminating inefficiencies and duplicating transactions and things like that, that can help drive down your overhead and administrative and operational costs significantly. I've seen this time and again when we've been able to integrate StoneSpot with QuickBooks and reduce a ton of inefficiencies. So by implementing these cost control measures, you can help improve your bottom line, even if it's just a little bit, that adds up. And you can help yourself become a little bit more competitive in the market. So now we're going to talk about how to implement these strategies. So with the record keeping and reporting, how do you do this and why? So accuracy is incredibly important for lenders, for stakeholders, for everybody else, for the audits, for the IRS. Having accurate financial records is essential for compliance and regulatory purposes. So using an accounting software like QuickBooks, Peachtree, Sage, Xero, any of those will help you streamline your record keeping and improve efficiency, and you know that it's correct and it's in there accurately. It also allows you to generate your timely financial statements, which will help you react much more quickly to changes in anything that's been happening. And if anything happens, you're able to catch it much earlier if you can run a report every month and see how you've done compared to the prior month or the prior year. So the combination of the precise record keeping, the accounting software, and the regular reporting provides a comprehensive view of the company's health that's then much more, you're able to give it to the lenders and things like that much more easily with a lot more confidence. And it demonstrates like professionalism and accountability, that you know what you're doing and that you're putting the work in to provide a quality work product as well with the reports. And again, we're going to talk about the risk management. So why is it important to have risk management and contingency planning? You guys face a lot of unique risks, I feel like, because the material costs can fluctuate so much. I saw this a lot during 2021, right after COVID, and the granite costs were crazy, and then lead times were insane, and then the freight costs were crazy. And so you guys have a lot of fluctuating costs, and you have material costs, there's economic downturns, there's regulatory changes, right? If things change in the industry. So it's crucial to carefully assess and address these risks and keep abreast of what's going on. Also, another one I've seen happen in real life is proper insurance coverage is essential. It's essential. You need enough insurance to cover your liability, property, employee safety, all of that stuff. You need to have that insurance in place so that if there is a catastrophe, you know you're covered and you don't have to, you're not going to risk the business on losing an asset or a large order or something like that. And then we talked about, again, about maintaining emergency funds and having that 3 to 6 months worth in the bank. And it just lets you respond quickly to challenges or, like I said, catastrophes. Or, as I've also seen a couple times, maybe there's a really good opportunity that comes up and you're able to take advantage of the opportunity. There's a business that's for sale in your community that, you know, you're able to buy because you have that reserve, and you're able to buy that company and integrate it into your own. Whereas before, you might not have had the ability to do that because you didn't have the capital, but now you can take advantage of the opportunity, or you can buy a really deeply discounted giant load of granite, right? And get inventory at way below normal cost. So having that in there helps you take advantage of those kind of things and also be prepared if something does go bad. And again, like back to the taxation. So as a pretty regulated industry, you guys have a lot of tax laws and regulations that we have to follow. Things like income taxes, sales and use tax. That's another one we are very familiar with. Payroll taxes, licensing requirements, sometimes in some states. So proper management of these compliance obligations is critical to avoiding costly fines and legal issues. It's essential to work closely with your accounting team and your legal professionals to make sure that you are in compliance at all times. Navigating this, I know, can be pretty challenging. It can be kind of scary, but it's a necessary part of operating any kind of successful business, but especially a monument business. So with the right expertise and processes in place, you can stay on top of all of that, and you can still feel pretty good about what you're doing and that you're following all the laws correctly. So the key is being proactive and staying up to date on any changes or new requirements. Um, if you just don't pay attention to what's going on, it's eventually something's going to catch up to you. So by being proactive, it'll help you be on the front end of anything that changes. So we talked about the tax compliance. There are a lot of tax obligations that everybody has to come up with. Not everybody has the same ones, which we've realized. So we have clients all over the country, and everybody has the federal taxes, right? Everybody has federal taxes, but some companies don't have state taxes. Some companies do have state taxes. Some of them have local income taxes on their net profit. Some of them only have just the federal, and they don't have state or local taxes. So knowing what taxes you're subjected to and what you need to collect and what you need to remit to the federal and the state level, like that's all super important. And we also want to make sure that you have accurate records, so we know that you're claiming all the deductions that you're eligible for, and that we're claiming any kind of credits that you're eligible for, because we know, hey, all of this accurate data is accurate and correct. There's also the sales tax issue. Oh, this has been a big one. This has been, every state is different. Every county can be different in some states. Every city in some states can be a different sales tax rate. And some states you can have their nexus requirements are different. Sales tax all in itself is just a very complex web, I feel like, for a lot of clients. So you need to collect and remit those sales taxes based on your local requirements. And we also need to make sure that we understand what those are as the tax professionals, so that we're guiding you and giving you the right guidance in regard to those sales taxes. And automating that sales tax compliance through technology and things like that can help make sure that you're ensuring accuracy and make sure that you're remitting the correct amounts at the correct times, which is the other biggest important thing. Finally, any commercial properties that you use for workshops, storage, showrooms, those are usually subject to property taxes, like local property taxes. So it's important to review those assessments that you get every few years and appeal it if it's necessary. If they've assessed it way too high, make sure you go and appeal that decision and reduce that taxable burden because they did a wrong assessment, incorrect assessment. So state and local tax considerations, we have the nexus and multi-state operations. The monument builders that stretch across multiple states need to be very familiar with their nexus requirements, nexus obligations, and how that affects the sales tax that they need to remit in the different states that they are doing business in. This includes sales tax nexus and income tax nexus. And the other thing is you want to be very familiar with if there are incentives or credits, depending on those other different states. Maybe they offer something that your native state doesn't offer. You want to be able to look and see if your other local state, if it offers like a government encouragement business incentive, maybe a job creation incentive, community development incentive. We had somebody reach out to us not too long ago because he had found there was a small city grant that was being provided to anybody that applied with a small business in the specific city. And we were able to help him fill out the application and get the grant for that. And so like that's important to be aware of those and to know that you can look out for those and keep an eye out for those. And that can help you reduce your overall tax liabilities. Everybody kind of knows about the most common tax deductions and credits, but just to kind of go over those real quick. You know, you can deduct the cost of your materials, like your marble, your granite, bronze, stencil, all of that stuff that are used in the construction. Wages to employees that do the designing, the carving, the production, installation, those are all typically deductible. I can't think of any reason why they wouldn't be deductible, but maybe there would be some specific circumstance, but those are usually deductible. You can also depreciate your business assets. So equipment that you buy, buildings that you build or purchase, improvements that you make to those buildings, those can all be depreciated. Vehicles that you use, those can all be depreciated. And that can adjusting how you depreciate your assets can really make a difference in your taxable income year to year. And so having somebody that can review your depreciation methods and adjust it to better fit your income tax situation for the current year is of utmost importance. And it's something that your tax professional should be reviewing as they're preparing your taxes and your tax return for the year. So there's some software and tools also that we know that you guys use and that would be helpful in all of this whole holistic financial management thing, right? We have the CAD softwares, the design softwares, AutoCAD, SketchUp, I think is one. Those allow you to create 3D models and visualizations. We have things like project management tools like StoneSpot. Those help you coordinate different stages of construction process and production process, and it keeps your customers and your team on the same page. Then we have the accounting software, which is crucial for managing your finances, maybe invoicing your clients, and ensuring compliance with relevant regulations and the tax requirements. So I'm going to talk a little bit about QuickBooks Online and StoneSpot just because they're the most common software that we've used, that we've seen, and that I have experience with. I am a QuickBooks Online Advanced Certified Pro Advisor, so I'm very, very familiar with QuickBooks Online. I use it every single day, and I've helped many, many clients through lots of weird situations in QuickBooks Online. So it's not perfect. It definitely has its faults, but there's a lot that it's also really good at. So it's a powerful cloud-based accounting platform. It helps businesses manage their finances efficiently. It provides a centralized platform to track your income, your expenses, bank transactions, all of those things. And it gives you very quick and easy visibility over your financial health. The invoicing and payment features allow you to create professional invoices for your customers while also paying bills, entering bills from vendors. You can send payments. All of that stuff can be done through QuickBooks Online. The expense management tools help you categorize all of your expenses into the right categories so that when you go to run your reports, they're accurate. That would include things like material, labor, cost of goods sold, and overhead. And also you can generate customizable reports that provide you with insights that help you monitor your business. Maybe you can run a report by sales type, or you can run a report by location and see which one of your locations is generating the most profit and which one is maybe not as profitable. So QuickBooks Online has a lot of flexibility with that. That might be useful going forward. The benefits of QuickBooks Online for monument builders specifically. So it's useful for a lot of industries, I feel like, but the things that stand out to me are, the one, you can customize the invoices but pretty well to how you want them to look. The two other biggest things: remote access. You guys are in trucks, you're in the cemetery, you're visiting a client, you're at the bank, and you're able to pull up anything you need from your phone or your iPad. The remote access to QuickBooks Online is one of the best features about it, I feel like. And then the other one is the collaboration. So the thing I love about QuickBooks Online is that you can invite me as your accountant user, and I can get access at any time, day or night, to your file to see what's going on, to help you with a question. I can help you if you're having trouble reconciling a bank account, right? I can go in at any time and I can run reports for you that without you having to send a file back and forth, or without you having to provide me with a login information. It's all right there. You and I can both work in the file at the same time. And that's the biggest thing that I love about QuickBooks Online. The other thing that we talked about was StoneSpot. So StoneSpot was specifically built for the monument industry, right? Missy and Brian built this several years ago for the monument builders for your unique needs. It provides robust inventory management capabilities to track your raw materials all the way through production to finished products. It helps you keep track of stock levels, inventory stock. The project management features streamline the planning and execution of multiple monument projects that improve your overall workflow. The integrated client communication tools, they have, I think, texting available now, there's emails. All that helps facilitate updates, customization requests, timeline management, and it enhances the customer experience because they know that they're able to reach you there and they're getting updates as their monument goes along. And then finally, the workflow automation reduces administrative burdens and improves efficiency by automating repetitive tasks, such as duplicating entries in StoneSpot and then going to QuickBooks Online if you didn't have them connected, and entering in transactions in both sides, which we've also seen that before. So having that there integrated together reduces all of that administrative work. So now I'm going to talk about the action items, like what you can actually do to help your company. The first one is you need to embrace technology. I know it's hard, but technology is crucial for improving operations and customer satisfaction. We've seen many clients go from they just had paper, everything was on paper, to having to learn how to use StoneSpot and QuickBooks Online at the same time. But then the difference that it made in their company was tremendous, right? So many of our clients have transformed their business by adopting accounting software and something like StoneSpot just to help them navigate all of the customer experience, having good financial records, all of that stuff, and not having everything just in paper. That it also allows them to boost their efficiency, obviously, and better serve their customers. The next bullet point would be continuous improvement. It's easy to get stuck in the day-to-day. You just need to get through today, but by finding opportunities for improvement and reviewing your processes, adapting new technology or new financial processes can help you grow your company and help see where you're able to find opportunities for more growth or profitability. Staying on top of market changes, things like that, all of that is also key. And then the collaborating with your professional team, that would be your accounting team, maybe your legal team, your management team. Collaborating with your accounting professionals, it provides valuable expertise in tax planning and compliance. Like that's what we're good at, right? We're good at knowing how we can help you be most tax efficient and help you get to where you want to be in the next year, 5 years, 10 years. And we're able to help you with that and navigate all those tricky landscapes as well. So the combination of technology, continuous improvement, and professional guidance has been, I think, a really good boon to a lot of our clients because they've been able to leverage all of those into boosting their company forward. So in conclusion, I want to talk about the three things that I think are the elements of the base elements of the pyramid that contribute to the success of your business, right? A solid accounting foundation is essential. It provides financial stability and insights needed to make informed decisions and drive growth. And knowing that you have good financials at any specific point in time that you can rely on, that's such a relief for not only you, but also for people like your lenders and your stakeholders. The effective business practices don't just help day-to-day operations, so they offer valuable insights that can help guide your company's strategic direction. So by reviewing and looking for opportunities that can help your company take advantage of those opportunities and grow. And then finally, in this dynamic industry, continuous learning and adaptation are critical. Staying agile and open to change is the key to long-term success. I know change is hard for a lot of people, but by doing this, you're able to stay on top of this and move with the industry as well as with the rest of the world, and be a part of the future and not be left behind. And that's all I have.
Great, thank you, Angie. I've got some questions popping up in the chat, so for the rest of you, feel free to throw some questions in the chat, or if you want to click on the heart icon on the bottom of your screen and then click raise hand, I will look for raised hands as well. So Angie, can purchasers list a monument on their taxes as a deduction? Clients ask this a lot.
Can purchasers
Yep, list a monument on their taxes as a deduction.
Oh, so like a
The
client is
customer,
a
yeah.
customer is purchasing a monument?
Mhm.
Not typically, because it would be considered like personal property. So it's not usually a deduction unless it would be for like a monument that was donated, maybe for a service or a park or something like that. That's, I think, when you would be able to deduct the cost of it. If it's for your family member, I don't really, there might be maybe a state somewhere that has that option, but from what I've seen, not really, unless it's being donated.
Great. Other questions? Folks want to raise their hand or type questions in the chat? Okay, here's a good one. Okay, so we use QuickBooks and StoneSpot. We take credit card payments and receive a lump amount at the end of the day. When we issue a refund, it also deducts from the lump amount. However, I've had an issue where the amount that shows up in the bank reconciliation tab of QuickBooks is lower than one of the deposits we receives. That makes it so that we cannot select the deposit and the refund when trying to reconcile.
Yeah, I've seen that a lot too. Usually what needs to happen is if you know that a batch is going to be reduced by the amount of the refund, you'll need to add it as part of that deposit that's created in QuickBooks. So you might need to create a different deposit or unselect those transactions and then select them all again. And then you'll have to add the refund. Usually we have to add it as a separate line at the bottom because the credit card processor nets it instead of doing a separate transaction, which is just kind of a process thing that's kind of annoying, but I don't really know if there's a way around it. At this moment, I don't think there's a way around it.
Great, great question. Other questions? All right. Are you sure you have this great resource? All right. Then Abby, do you want to close this out?
Yeah, I have a
Somebody-
quick question and I couldn't find my thing. And then it looks like Tanya has a question too.
Okay, we have another one pop up. Okay, great.
Yeah. Quick question is this. In your presentation, you said like cash flow reserve should be like 3 to 6 months, right? Do you
Ideally,
have another, ideally, yeah. Do you have another breakdown too, like where, you know, percent wise overhead shouldn't be more than this percent or inventory shouldn't be more than this percent of things like that? Is that a thing?
so that would be something you'd want to look at, like with benchmarking. That's where, because every industry is different, right? We can say in general, you want to have this much in reserves for whatever, or inventory shouldn't be this much more. You want to have an asset current ratio, current assets over current liabilities of 2.0. Like that's a really good current ratio. But that's not necessarily feasible for every industry and not feasible for your industry. So we review it on a client by client basis because I feel like they're all so different. Even in the industry, every one of them is different. Every one of you does different things. And so by the benchmarking, if we're able to kind of get that with the MBNA working, with more participation, we'll be able to see where maybe everybody has it in this specific ratio and yours is way out here, right? And that helps you identify where you can make improvements, or maybe where you're really crushing it and they're all not doing as well.
Yeah. Thanks. Tanya, do you want to unmute and ask your question? Oh, she put in the chat. Regarding credit cards, they don't currently take them. Do a lot of you do this through QuickBooks, or what is a good resource?
So they mean StoneSpot? Oh, you don't currently take them. Okay.
Yeah, right.
Yes. So yes, we have a lot of people. It's not easy to do it through QuickBooks because if you're taking deposits, I guess it's hard to explain. If you're taking deposits on an order, it's hard to do that through QuickBooks ahead of time because you have to create an invoice in QuickBooks to send to a customer to have them pay it. Whereas if you're using StoneSpot, you need to complete the order first before you invoice it. So the timing doesn't work because you need to invoice it in QuickBooks before you finish the order in StoneSpot to get the payment in QuickBooks. So a lot of ours use other payment processors and then they just record the batch. You know, they use Square or what's the other ones? Square is the one I see most often. But you can use any of the payment processors, really, I feel like. I would not use QuickBooks payments if you're going to use StoneSpot at this time, just because of the way the workflow is. We can't request a payment through QuickBooks without doing an invoice. And then you end up with the duplicate invoices, and we don't want that either.
Is there anything you can think of that people automatically assume is deductible, but that it really isn't?
Everybody thinks that their commute is deductible as business miles. It is not. Your commute is not. Business miles to driven to cemeteries and stuff is, but your drive to the office is not deductible. Everybody always asks about that. Meals, entertainment this year went back to 50%. That's something also to keep in mind. For during like 2020 and 2021, it was 100% of meals, but now it's back down to 50. That's another people kind of get tripped up on. Travel, as long as it's business travel, that one, you know, that's fine. But if you're putting personal travel, obviously on your business card, and personal use of vehicles is another very, very important one. If you buy a company vehicle, but you're using it to drive your kids to soccer practice in the evenings, like we need to know what the business miles are versus what your personal miles are. So it's important to keep in mind that if you're buying a business asset, you need to be using it for business purposes, or we need to adjust for it.
Great. Sometimes receive complaints about how the deposit shows on the invoice before the subtotal. So you don't see the actual total. Do you have a way around that?
Is that through StoneSpot?
And Patrice, can you elaborate on that?
Okay,
Yes.
through StoneSpot. What we can do is we can reach out to Missy. So that's just a way of it. What happens is when it creates the deposit in StoneSpot, it creates a journal entry. So you create the little deposit and you say post. It sends a journal entry to QuickBooks, and that creates your deposit so you can make it with your credit card processor, your bank account, all that stuff. And then in StoneSpot, it just sits there until the order is ready to be done, right? And then when you invoice it, it adds it as a line, as a subtraction, as you're saying, before the subtotal. We might be able to talk to Missy about moving that around on the invoice template, but I don't think with the way it works with QuickBooks, it's added as a separate line that's a subtraction in the body of the invoice. So I don't know if there's a way to get around that at the moment. But I do know what you're talking about, but we can talk to Missy about it maybe and see if that's something that can be implemented in StoneSpot.
Okay. I think Missy's here, so she heard that.
Missy can answer.
And then other question, are there companies that work with monument builders, or is anybody using a company that offers payment plans for families to pay over time? The monument builder gets paid up front and then they basically finance through this other company.
I don't think I have anybody in the monument industry that uses payment plans, but I do know I have an HVAC company that they have clients, their customers that finance their purchases, because you know they're usually very expensive. It's a new air conditioner, a new furnace or something. And I have to think, I can't remember which company he uses. Synchrony. I think he uses Synchrony. And Synchrony pays him up front less their fee, their 3% or whatever it is, but he gets paid up front, and then Synchrony it follows up with the customer and they make sure they get paid. So that might be an option. I don't have any monument companies that are currently using it, but it could be something that you can be beneficial. Oh, Missy answered, I see, about the credit card.
Nathan put in here, gethearth.com is another company that can offer financing at a yearly cost. So that's another option too. Question about, well, it's a question for somebody who posted something about PayPal. So how do you do this? So I don't know. I've lost that string. Oh, they use the PayPal platform, which allows each employee who would have a client to have their own account. So how do you do that? So Maybe you guys.
Oh,
can- Yeah.
that was with me. And what we do with PayPal is so each employee has their own user and they can charge it, which they don't have to be tied to the computer that has the processing. So not every employee has QuickBooks, so they wouldn't be charging it through QuickBooks. So every person would be able to, who would need to, every salesperson has their own account so they can charge the client while they're meeting with them. It helps too, because remotely I can, if I'm meeting a client at their home with my laptop, I can charge the client remotely too. So it just makes it easy. And then when each charge will download to PayPal account on QuickBooks.
Mhm.
And then once you record the match that with my sales receipt, then it records the deposit and subtracts the fees
Yeah,
in like two separate line items based, and that's how the report comes to. So it makes reconciling so a lot easy.
yeah, that's a good idea.
Thank you for sharing that. All right. Well, we are coming up to the end of our time. So Abby, you want to close us out?
Yes, that was very great. Thank you so much, Angie, and thank you everybody else for being here today. Please note that this webinar counts for 1 hour of CM credits. You can learn more about this Certified Memorialist program at monumentbuilders.org. If you click on About MBNA and then select the Certified Memorialist program. And if you're not already doing so, I do encourage you to find the WinMBNA Facebook page. You can request to join that, and then you will know first about all of our WinMBNA programming. Also, finally, be sure to mark your calendars for the Monument Industry Show in Cleveland, March 13th through 16th, 2025. The WinMBNA will be hosting an event during that convention, and more information about that and registration will be coming out later this fall, so keep an eye out for that. I do want to say thanks again to Angie for her presentation today. If you guys have any questions, I'm sure you can reach out to her or one of us and we can get you guys connected. Thank you so much, and you all have a wonderful afternoon.
Thanks, everyone.
Bye, thank you.